Yo, what's good? It's AM Trades, and this is day number 10 of the Nothing to Funded Challenge, okay? Zero to hero, man. So, like I've said before on our journey, we have a $100,000 live funded account, three $200,000 challenges, and one $25,000 challenge, okay? Today, we are just going to be doing a trade recap as well as going over kind of our weekly recap and where we are with each one of the accounts. I will be getting screenshots for each one and kind of putting them up here and walking you through our progress for this week. So today's overall gain and loss was 1% made. We did overtrade today, actually. That's something I'll get into that. But yeah, so a little bit of overtrading today, and profit and loss 1%, so $1,000 on the live funded account, and that brings us to negative 2% in drawdown. For that account, which is quite good for the week. We made 3% on it, which is not bad at all. Started the week at 4.5% drawdown, and we came back, man. Like I said, trust in your system is all you need. So yeah, with that being said, we can get on the charts. You can see 1, 2, 3, 4, 5 positions, which is, oh no, not 5. I didn't take that. 4 positions, which is kind of insane. I definitely should not have been doing this. Well, I think I can count this as 1 because we did have a re-entry. However, 1, 2, 3 trades, which is a little bit over what I wanted to be risking for the day. However, I will get into why I took those all, and yeah. Oh no, 4, including this one in AM. So what we ended up happening today is on the 5-minute here, if we go to market open, we had consumer sentiment today, came out bullish, however, did not really affect the markets at all. So we saw consumer sentiment come out at 10 because we had news. I was not placing any trade before 10 a.m. EST. And what we saw, I wanted to see a turtle soup of this low into this 15-minute for value gap, and then see us move to the upside, right? Because we are in bullish order flow on the higher time frame. So yeah, I was looking to tap into this 15-minute for value gap and then see reaction to the upside and then enter off of a 1-minute inverse, which is what we ended up doing within the macro. And this ended up being a loser. I took this on all 3 challenge accounts. I didn't take this on the live account because it just wasn't as high probability. However, so here we could see we had the 1-minute for value gap, and then we inversed it with this bullish candle, enter off of the close of the candle of the inverse, stops below the protected low, as well as 1-minute order block protecting as well, and we already saw tap into a 15-minute for value gap, so I didn't want to see a revisit of this area, or this trade idea would be invalidated. And then we were going to take profits at this high, so the manipulation high right before news. Okay, and so what ended up happening is at this point, order flow started shifting bearish. We saw a tap back into this. I believe it was a 3-minute for value gap. And then order flow shifted bearish, and we continued to the downside, okay? And as soon as we started continuing to the downside, so that's minus 1%. As soon as we started continuing to the downside, I wanted to see Asian low and London low get taken. So we can see here we had London low was here. So this was our London session low. And then we also had Asian session low, which was this green line. It ended up being a take profit for a trade that we took. And we were in premium of our 6 p.m. EST open, which is the open of the daily candle, as well as our midnight open EST, implying that we are in premium, meaning we want shorts, right? Or meaning shorts are higher probability. And what we ended up taking is a continuation play. We saw bearish order flow. I didn't get in on any of these price moves down. We come down, we sweep London low. However, we leave Asia low. And if we come down this sharply, especially on a Friday, the chance that we leave Asian low when we take London low and that they're so close together, as well as our midnight and 6 p.m. open, is very, very low. So I wanted to see us come and retrace up a bit and then see an entry and then get booked at Asian low. So our confluence for this trade was on the 5-minute, we had a 5-minute order block form here. This 5-minute order block, we came tapped into it, rejected it, and then I was waiting for a 1-minute confirmation. So 1-minute confirmation ended up being this bearish for value gap. If we have a look here, look at this bearish for value gap that got tapped in perfectly here on this candle. I entered, and then we saw a swift move to the downside, big retrace back up into here, into this 1-minute order block. I was not stressed, trade idea is not invalidated until we hit stop loss, and just targeting Asian low for a full take profit. I ended up closing at a 3.2 oh no, sorry, 3.0. So price actually moved so aggressively to the downside that I got filled all the way down here. So yeah, this green line is Asian low, so that was 3%. I only took that one on the funded account. I didn't take that on the challenge accounts because when I am taking a trade on all 4 accounts, it is kind of more difficult because like I said, I trade on the 1 minute time frame, so taking quick scalps like this is not really feasible to set up 4 different accounts limits and then have their proper risk. I'm just more prone to making errors, and that's not something I'm willing to risk happening, right? It doesn't make sense for me to do that when I can trade them semi-individually or trade some of them together, some of them not together, because in the long run, they will all be passed and I will make money on them, right? So yeah, this was a quick trade. About 10 minutes, we made 3,000 on the funded account, which brought us back up to break even. We were at 97,000 this morning. This trade brought us up to 100,000. Okay, so we were break even here. And all the trades I took after this were all on the funded account. They were not on the challenge accounts, okay? So what we ended up seeing further is kind of chop around as we expected with a big move down on a Friday with barely any news. So we saw a big move down. We saw all of this engineered liquidity. I wanted to see this get taken in PM session, okay? This green line here is equilibrium of the larger move down, right? So this range. And I wanted to see us go and book it, right? To balance out price action, okay? So what we ended up seeing is big move up. We sweep these lows. We create S&T with ES. If we go to ES here, where are we? Here at one, no, it's here. Yeah, so at 1147. Yep, 1147. We can see that we do not take this low on the Nasdaq. We take this low on ES. So that implies that we are bullish. And then we see nice displacement out of it, inversion for value gap. We tap back into the inversion for value gap on the 1 minute. I enter. Okay, stops below the S&T because if the S&T gets invalidated, my trade idea is invalidated. And then I didn't want to take profits all the way up until this high here, which is a 15-minute high, into a 15-minute for value gap. So that's where I wanted to see price book first. And then I ended up putting this orange line here as a break-even level. So when price hit this area, I set my stops to break even or at least limit my risk. I ended up limiting my risk to here because if price wanted to come down and mitigate this 1 minute order block before sending price back up, I did not want to get stopped out prematurely at break even. Okay, and then so that was a 1% risk trade. And then what we ended up seeing is while we were floating in profit, we could see that we were just chopping around, created equal highs, which means that we engineered liquidity. So this is even more confidence to go long. And so we saw a nice retrace into this impulsive move up into this fair value gap. And so from here, I was kind of wanting to see a re-entry. And then we ended up re-entering here off of a inversion of this fair value gap here. Okay. Oh, no. Yeah. Oh, this larger price range. Okay, so these two fair value gaps together. So we see a inverse. I enter. Okay, enter there, and then this is a re-entry at 1% risk, which means that right here, when I enter here, my total risk in the market is 2%. Okay, now I don't want to lose $2,000 in one trade, so what I do is I will trail my stops. If stops are here for this big position, for the first one, I will set my stop loss for this position to the stop loss of the second position, which means that if I get stopped out now, I am at I am at 1% risk minus whatever this profit is, so about $100. So this means that my total reward is a 1.92 plus 3.29. So my total reward is about $5,000, and I'm risking $1,000, right? Well, I'm actually only risking $900, and it's only a 1 to 3. So that is how you really maximize your risk to reward, because if I have a 1 to 5, I'm profitable on anything over a 20% win rate, right? So it makes sense for me to be adding onto positions like this when the trade idea is still valid and when market structure is supporting my idea, right? So we see this big move up. I didn't have the take profit set here. I set this later. Oh, sorry. I set this later. So we came back and then we retraced deep. Again, Friday PM session price action. What can we expect? We created equal highs with here. Okay. We came down, ended up getting stopped out here. So this was about a $900 loss. Okay, so now we're at 99,000 on the funded account. And then I tried to take a re-entry. I should not have taken this last trade. That is the big mistake I made today. My drawn liquidity was still valid because of all of the pent-up liquidity there, as well as equilibrium of the range. However, I should have waited for my time-based manipulation to happen at 2 p.m. This was our 2 p.m. manipulation. We see that we saw a move down, took out all of these early buyers, which was me, and then came and mitigated this order block, as well as tapped back into this fair value gap, inversed it again on the 1 minute, giving us confirmation. So I should have waited and went long off of this inversion fair value gap. Okay, and then we can see that we made a swift run all the way up to, this was the 15-minute high. This was another this was the previous relative equal high on the 5 minute. This was the 15-minute high, and this was equilibrium. So we can see that we booked exactly to equilibrium. Look, that is absolutely beautiful. Okay, wicked up to equilibrium. Would have been a full take profit hit for about a 4.3. So that's what happened, but we ended up taking a loss here. So we are now at 98,000 on the funded. Sorry, I don't know what I'm saying. We ended at 1% in profit today. All right, so that was today's trades. We definitely did overtrade a little bit. I would be happy with today if we didn't take that last position, because I do think it was quite silly and unneeded risk. Okay, so yeah, those are all journaled, and I think I did quite well today. My bias and draw on liquidity was quite nice. I remained fluid in the market and didn't let losses affect me at all. I just kept pushing through, and I was not revenge trading. I limited my risk. So yeah, overall, pretty good day. And this is actually great price action for a Friday. Usually it is not this great. And what I will be doing to prevent a day like this happening in the future, where I give back 2% to the markets, I'm going to be limiting my positions in PM session on a Friday afternoon to one position max. And that includes, that doesn't include a reentry. So if I see another setup like this, where we see an entry and we see a reentry off the same trade idea, I'm allowing myself to take a reentry off of it. But like I said, if we get stopped out here, I would not allow myself to take that other position. Where is it? That we did take. Hold on. Right there, right? So I would not let myself take that just as a part of my trading plan. So I added that to my trading plan, and that is now in effect. So yeah, we made 1% today, which is fine and dandy. You know, money in the market is money in the market. And our number one goal will always be capital preservation. Okay, the only thing you should be looking to do in the market is preserve your capital. You should not be looking to make insane gains. You should not be chasing gains. You should be playing the market like a game, staying emotionless with it, following your plan, and trying to preserve your capital. Because as soon as you start not even just feeling emotional, but as soon as you start chasing profits, the market will take that money away from you. Okay, it rewards those who are patient and those who are disciplined. And that is what we showed all of today, except for that one trade. So I will definitely be doing some reflection on that, as well as a full trade journal of each one of these trades in my Notion journal. And we will be doing a full trade recap as well tomorrow. So yeah, with that being said, that was today's trade recap. So day 10 of the 0 to hero, 0 to 1 million in funded challenge. And yeah, with that being said, next week we should have some good news. We should have some nice volatility in the markets, and we should come back and preserve our capital and hopefully make some profits. Yeah, with that being said, I appreciate you guys for watching. Definitely tune in for tomorrow's video. It is going to be great, and I will see you guys in the next one. See ya.